right, here we go. We're approaching 23,000, 24,000. We're approaching 24,000, but that's not the good part. The good part is that Bitcoin is breaking all of the amazing technical levels that we actually wanted to break. I'm going to show you a whole lot of technical levels that Bitcoin's breaking, and then we're going to decide whether this is a relief rally, a bear trap, a dead cat bounce, whatever you want to call it, or whether we could be actually getting back into some positive momentum. Because I guess the big question on everybody's mind is, can we trust this pump? Can we actually trust this pump? And I'm going to show you a whole lot of data, because it's all about the data, which shows you whether or not you can trust this pump. And if we can trust this pump, well, then what are we buying? Are we buying? Is it too late to buy? That's what we're going to be talking about today. So I'm back from a vacation, here to bring you crypto love and crypto wisdom. Let's do this. Let's have some fun. Let's have some fun. Yo, get the fuck out of bed, bitches. I'm back. And it does seem every time I get back, the market starts to pump. I was kind of hoping that while I was away, nothing would happen and the market wouldn't pump. And then as I get away, the market starts pumping. So I didn't get any rest, because all I was doing was basically looking at the market and taking a whole lot of trades. You saw that. If you've been following me on Twitter, you saw that I've been taking a whole lot of trades. Anyway, here I am. I'm back today. I guess on one of the best days out there. Seriously, one of the best days out there. Market's green, but not only is the market green. The market green is one thing, that's cool, but it's not like all about the market being green. We've got Bitcoin going to 24,000, and I'm kind of sure that during this show, Bitcoin will get to 24,000, but that's not what's going on here. What's going on here is actually much bigger. So you got Bitcoin breaking a whole lot of key levels. The first key level that we broke was this resistance level over here, which was 21,800, 21,900. We broke through that 21,800. And now what we're saying, and what Sheldon's saying, and a whole lot of other people are saying, is that there's not much resistance until about 28,500. I'm going to show you why we could quite easily get to that 28,500 level and maybe even go beyond. But that's not the real question. The real question is, if we do get to those levels, is this now the beginning of another bull market, or is this a relief rally? Because you got to remember that relief rallies can't be ignored. You can get a relief rally that does huge. I mean, you can get 80, 90, 100, 200, 300% relief rally. Sometimes you can even get to 80% of the previous all-time high, which would put us at over 50,000 in a relief rally. So we've got to look at all the data, and we've got to make a call as to whether we should trust this pump, because you're getting people on Twitter, you're getting other YouTubers, you're getting people saying, don't trust this pump. It's a dead cat bounce. It's a relief rally, which is definitely going to fail. It's the first relief rally that we're getting. Is this pump actually real? Is this pump actually going to take us through? Should you be buying this pump, or should you be watching on the sidelines going, hold on a second, I'm not ready to buy this pump. I don't believe this pump, because that's what I'm seeing. I'm seeing people saying, I'm not ready to buy this pump. This pump is not a pump that is not going to last. No one trusts this pump. Is that a good thing, or is that a bad thing? That's what we're going to be talking about today. So it's going to be a lot of fun. Do me a favor, I haven't been here for a while, so no one knows I'm back. So smash the like button, help me get this content out there to everyone, and tell people that I'm back, and I'm back in my normal time slot, bringing you crypto love and crypto wisdom every single day, every single day. Let's also, today we're going to be doing ByBit giveaways. We're going to be 10xing someone's ByBit portfolio. We haven't done that in a while, and I promised you guys we're going to do that. So if you have got a ByBit account, or if you haven't, go and sign up with the referral link below, and then deposit money into your account, and we could 10x your account. That's basically where we're at. Alrighty, the stream is lagging.
Yeah, you're on the cable.
I am on the cable, yeah. Let me try and get onto Wi-Fi. How badly is it lagging? Maybe I should hop off and hop on.
Everyone's saying, yeah.
Okay, let me hop off and hop on. Carl, will you just hop on? Okay, let me.
What must I do? Tell them about my amazing show that happened on the Crypto Shorts channel. Yeah, okay, guys, I guess I can screen share quick while Ran's there, and I'll show you what my thoughts are, at least on the market. Screen share, here we go. All right, there we have it. So I did personally post this. The way that I'm looking at the market now in a high time frame is that this rally is obviously going to run into some sort of resistance anywhere here between about $25,000 and $30,000. So this is the main zone that I'm looking at as resistance, is this level over here. And I mentioned on Twitter that, I'm lagging too. I guess that doesn't help.
Okay, let's try a remove card. Let's see, is that any better? Can you guys see me? Can you hear me? Am I still lagging? How are we doing? How are we doing? Give us some feedback in the comments. Are we still lagging? Should be good. My internet looks like it's good. Still lag.
Let's see.
I don't know. What do you say? Are we still here? All right, let me know if you guys can hear me. Anyway, let's get into the data. Let's look at where we're at. And I'm gonna paint you guys a great story. I think the first thing that we need to look for is we need to look at the levels that Bitcoin broke. And as I said, it broke the 21,800, now on the way to 28,508. But more importantly, Bitcoin's also broken two other key levels. And I want to show you those two key levels. The first one is significant, but not very, very, very significant. It's significant. It's something we should look at and something that we should be proud of ourselves for. And that is if you look at the 50-day moving average. So you look at the 50-day moving average and you see that on the daily, Bitcoin just broke above that. And you know, the significance of that is that we have been under this moving average since the 12th of April. So since April until today, we've been under this. And now, for the first time, we've just broken it and we've just closed above it on the daily. That's one good level that we've actually broken, and it's significant. But that's not the real significant level. The real significant level is, in my opinion, what is the most significant chart for Bitcoin. And I want to talk about that chart quite a lot today. And that is this moving average over here, which is the 200-week moving average. So let me put that there. And if you look at the weekly and you look at the 200-week moving average, you'll see that for the first time in 5 weeks or 6 weeks, we've just gone above that. So we've just gone above that. It was about a 22,700, and we've just gone above that level. Now, that is for me something that's very, very, very significant. It's something that we need to spend a lot of time talking about today. I'm going to show you the significance of that level. Because if the theory is correct, then we've just broken that level. We could be on the way down to 28 or up to 28. We could be there. And I still think, and I think that Bitcoin is actually going to pop. And I'll show you why Bitcoin's going to pop. What you'll see is that Ethereum was actually the one that started this pop. So if you look at the Ethereum, if you look at Ethereum and you look at where this pump actually started, if you look at where ETH came from about $1,000 and has done about 60% in just over a week. So quite weirdly, ETH was actually the one that started this pump. And if you look at what Ethereum looks like relative to Bitcoin, that's the ETH versus BTC chart. So only up until we had a slight Bitcoin breakout yesterday, we had ETH basically leading this pump and taking this pump on its own. And you would have seen that if you're watching ETH versus Matic, if you're watching Matic, and if you're watching all the altcoins. And this is a very strange pump, and I'm going to show you what actually caused this pump. But because we've had ETH explode and Bitcoin not actually yet break out. I mean, if you look at ETH, as I said, ETH is up 60% in a week. And if you look at Bitcoin, let's quickly get our Bitcoin chart back here. Here it is. So let's look at our Bitcoin chart back here. Then you've got Bitcoin this week. What's it, 10%, 12%? With ETH going up 60% in the same week. So Bitcoin up, Bitcoin up 20%. So ETH going up about 2.5 times as much as Bitcoin has been going up. So what actually happened here? What is it that actually caused ETH to rally? And the question is Bitcoin actually going to follow ETH in this rally? Because if Bitcoin does follow ETH into this rally, then we can expect a real rally. And I saw a tweet that was done by Dylan Leclerc. And he says, if you look at the ETH open interest, which means the leverage taken on ETH, Okay, so this is the ETH perpetual open interest. And what you can see is that just a few days ago, we had a huge reduction very quickly in the ETH open interest. You see that line over there? It's a huge reduction in ETH open interest. That open interest is leverage. And that leverage, in this case, was shorts. And so what you had was you had a whole lot of ETH leverage in the market. And then there was some kind of catalyst. And then that catalyst effectively went in and brought ETH down. And you see that here, what happened was the shorts got liquidated. So as the ETH price went up, the shorts got completely liquidated. What was that catalyst? Well, that catalyst was a firm date, even though with Ethereum, you can never get a firm date for the ETH proof of work, proof of stake merge, for the date where ETH actually becomes a proof of stake blockchain. And there's a huge ramifications for that. So we'll talk about that in a second. What we're also seeing playing out is, so that happened, ETH drove the whole market up. And now, if you look at Bitcoin, and you look at the leverage on Bitcoin, you kind of realize that the leverage on Bitcoin hasn't been flushed out the market. So again, what you got is you got leverage on ETH, a whole lot of, this leverage is shorts. This is people thinking that the market is going to continue going down. There was a catalyst in ETH. That catalyst destroyed all the leverage over here. Bitcoin, leverage, but no catalyst or nothing that has caused the liquidations. Now, if we do start getting those liquidations on Bitcoin, then we probably are going to go straight back up to that 28,000 level. So I think the next level to watch is around here, the 28,000 level. And if we can break this 28,000 level, well, then we may get some kind of continuation in this rally. As I said to you, I think the big thing for me here was that I haven't yet seen a macro rally, a macro recovery being led by Ethereum. This is the first time that I've seen a macro recovery being led not by Bitcoin, but by Ethereum. Usually what happens is you get Bitcoin running first, then you get Ethereum running, then you get all the layer ones running, then you get all the small altcoins. Here, what we first saw was we saw Ethereum pop, then we saw Matic pop with it. We're going to speak a little bit about how and why Matic popped. And then after that, you kind of got this, I mean, you want to call it a pop, if we've just hit 24,000, okay, then we've had a Bitcoin pop, but that's not the real pop. So I do think that we may get a slight liquidation of all the shorts that are in Bitcoin, and that could actually send Bitcoin up pretty quickly. And that may play out exactly like Gareth Soloway said when he came on the show. I don't know if you guys remember, but he came on the show. Let me find this phone. I think about 41.35. Listen to what he said the last time he was on the show. Short dollar. I mean, I'm just trying to get an idea if you were.
I'll do short the dollar, long silver, and what the heck, long Bitcoin for the next 30 days.
Wow. Okay. Tell me about silver. Why your preference on silver? You just think it's been. So remember when he came on and we did.
He just hit some key support on silver.
We did that big banter with a whole lot of chartists. Well, that's when he said, okay, he's going to go long Bitcoin and he's going to go short the dollar. Let's look at what the Dixie is doing at the moment. So it is down from its high. It was at about 109, and it is recovering from its high. And that's on I guess where we're at now is that if you look at the macro environment, you've got the dollar coming down, so the dollar starting to weaken. You've got the NASDAQ looking pretty good, up another 103 points. What you need to look at, though, is not today, because today is not really interesting. Look at the last week. So if you take the NASDAQ, you've got the NASDAQ up like 8% in the last week, which shows that the stock market's also starting to show some kind of reprieve. And this is a huge week for the stock market. So we're talking about a huge week for the stock market. Why is it such a big week for the stock market? There's two things that are at play. One of them is happening already, and one of them is something that happens tomorrow. And we've got to keep our eyes on both of those things that are happening on the stock market, because both of those things could affect the stock market. And if the stock market does start coming down, then rest assured that this rally might start cooling off. I'm not saying it's going to stop, but I'm saying it's going to start cooling off. So let's look at what those two things are that we're watching. First thing that we're watching is we are watching earnings, as you guys said it. So let's look at where we are with earnings. today, yesterday we had Netflix. I mean, I don't know. They lost 1 million subscribers. Their revenue, let's just have a look here. I had a tweet around their revenue. Revenues were up 8.6% over the prior year. The stock is down 62% in the year. They lost 1 million clients. They thought they were going to lose 2 million clients. They ended up losing 1 million clients. Okay, great. The market celebrated. Netflix gets a free pass. This week, okay week. I think we should probably look out for Twitter's earnings, which are happening on Friday. Just to give us context around the Elon buyout and whether this Elon buyout is going to happen. Remember that yesterday, Twitter actually won the first appearance in the court where they want to expedite a hearing to force Elon Musk to buy them. And yesterday, the judge ruled that, yeah, they actually can expedite this court case or this hearing. So next week is, I think, the big earnings week. So next week, you've got Google and Microsoft coming out with their earnings. You've got Facebook, Meta, coming out on the 27th, and you've got Apple on the 28th. This week, I think only today, we'll get Tesla. And remember that Tesla have been pretty good with their earnings in the last couple of periods. So I think from an earnings point of view, that's something that we need to be looking at. We need to be paying attention to earnings. If earnings start coming down and earnings start disappointing, the markets are going to go down. And if the markets go down, that's going to affect our relief rally. The second thing that we're looking at is, you guessed it. This is a big thing. I don't know why people aren't talking about it as much. And that is, there is a pipeline called Nord Stream 1, which is the main gas pipeline that flows from Russia into Germany. So it powers Germany's whole economy, basically. Everything that runs on gas, all the heating, all the industrial stuff that runs from gas is powered by this Nord Stream 1 pipeline. This Nord Stream 1 pipeline was closed for routine maintenance. They're calling it routine maintenance. And it's due to open tomorrow. So tomorrow, it's due to reopen. Now, because of the tensions in Russia and Ukraine, what we think, or what there is suspicion, is that this pipeline won't open. Or if it does open, that it won't open to 100%. It will just open we're hearing multiple reports. I mean, here are some of what we've seen. So Nord Stream to fulfill contractual obligations, that's what Putin says. That was a bit earlier today. But yesterday we heard, don't expect the Nord Stream to restart. That was from a European commissioner. And yesterday we also got Nord Stream 1 seen restarting gas flows after annual maintenance on time, but to a reduced level. So the question is, are they going to start it? And when they do start it, are they going to start it to a reduced level or to the full level? And are they going to start it? Is it going to work? If it goes smoothly, great, markets continue. If all of a sudden there is a disruption, even if it's just a fake disruption, if it's just a game being played by Putin, just to show how much control he actually has, and just to give the West a good reminder that they shouldn't be messing with Russia because of all the commodities that Russia controls, well, then we could get some kind of mess in the market. So if you are long, and specifically if you're long leverage, be careful. Be careful of that. Be careful of that position. I mean, I still have some of my longs open, as you guys saw on Sheldon's show. I've got my Bitcoin position still open. I've got my Bitcoin position open. I've got some of my ADA position open, and I've got my DOT position open. Those are the leverage trades that I've currently got. So currently got open. I've got them all open here on ByBit. I'll keep you guys updated as to how they go and whether I'm going to do it. You got to have the stop losses. You got to have stop losses here. Alrighty, what else is there on the macro front before we actually start talking about the relief pump, the relief pump? Carlo, you bullish yet?
I was short-term bullish, yeah.
You were short-term bullish.
Now I'm nearing resistance, so starting to switch almost.
You know your friend El Capo is not talking to me.
Yeah, no, I saw you guys had a big fight. Eh?
I just tried to point out to him. All I said to him was, I said to him, look, sir, you may be right about a lower bottom coming, but in the meantime, you're missing out on 200% on Matic and 70% on Solana and 65% on ETH. You've got to be able to change your narrative.
No, I don't know why he doesn't look at the low time frame trends, because he said it's in an uptrend, but then why didn't you trade it?
I don't know. He's not talking to me now. He blocked me. Hopefully we'll make friends soon. I'm sure we'll make friends soon. Tensions are high. All right, let's talk about whether this is a relief pump or relief rally and whether this relief rally whether we can trust this relief rally. And I think if you want to understand whether or not we can trust this relief rally, you've got to try and ask yourself a whole lot of fundamental questions. And I think the first fundamental question for me that needs to be answered, or the first thing that I see, people are saying, no doubt it's a bear trap. Remember that even if it is a bear traps can continue for long periods of time. Not every bear trap ends after a week or 2 weeks. This could continue for months. You could have a 3-month or a 4-month bear trap, and in this bear trap, markets could retrace to 80% of previous all-time highs. Okay. Now, the problem is that in crypto, we're all so shell-shocked after what we've been through in the last couple of days, weeks, and months that we are skeptical. And so even the biggest believers in crypto are sitting on the sideline going, we don't trust this pump. We don't trust this pump. And the problem is that as the pump gets higher and higher and higher, the pump is going to convince more and more people that it is a real pump, or not. If it stops, it stops. But the higher the pump goes, the more people are going to start being convinced that, hey, hold on a second, this is actually not a fake out. This is not this is a real pump. This is actually doing it. And so to me, I think the biggest clue that we have is actually in this chart over here. And I pulled this chart out over here, and I want to show you why I think that the clue actually lies in this chart over here. This is the 200-week moving average on the weekly Bitcoin chart. And there's a reason why I choose this 200-week moving average on the weekly Bitcoin chart. The reason why I do that is because what it shows you is it shows you the entire history of Bitcoin, and it shows you the trend of the entire history of Bitcoin. Okay, so you can see always, except for 3 periods in Bitcoin's life, this has been above the 200-week moving average. It's the biggest moving average that we talk about when it comes to trends. There was one time in 2015, and if you zoom in, and I'll zoom in for you guys over here, you'll see that was basically a wick down. You see, it was just a wick down. The next time that Bitcoin broke the 200-week moving average was here. It was the COVID event. And that was, you can call it a week or 2 weeks under, where Bitcoin was under this line for 2 weeks. And the next time was now. And so this is where I think the significance is. The significance is that if we look at the biggest trend line on Bitcoin, which is a 200-week moving average, and we look at the few previous times that Bitcoin has broken below this 200-week moving average, we can conclude that the only times that Bitcoin is broken below this 200-week moving average is when we get black swan events. We got it here in COVID. We had a 2 week under the 200-week moving average. And then we got it again here. And here we were under the 200-week moving average, and we've been there for 5 weeks, and we better close above it. Otherwise, we're going to go into the 6th week under the 200-week moving average. And we don't want to close below it. So it's super important that we close above the 22,800. I guess that's more or less where it is. If we do, then we can kind of conclude that what we witnessed recently was actually just a black swan event. And the black swan event this time wasn't COVID. The black swan event was the first major collapse of a crypto layer 1 protocol. You remember that was Luna. You had an $80 billion or $100 billion layer 1 protocol, which was held by the majority of the institutions and the majority of the retail investors. Then that caused the black swan event. That caused all the liquidations. That caused Celsius to liquidate, Voyager to liquidate, or to file Chapter 11, Voyager to file Chapter 11, Three Arrows Capital. We'll talk about Three Arrows Capital later. The black swan event of a layer 1 protocol, the widest held layer 1 protocol going under and taking with it all the leverage in the market against the backdrop of a stock market which was being reduced, is probably a black swan event. And you can see it in this chart. And I'll be convinced once Bitcoin closes over this white line. If Bitcoin closes over this white line, and I believe it will close over this white line, then we can be convinced that this was actually like a crypto black swan event. And if it was, now what we can say is we understand the extent of the problem. We understand how bad the liquidations were. We're starting to uncover all the damage. Remember when COVID happened over here? This was panic. This was before we knew what was going on. But then we know what was going on. Then we knew the Fed was going to start printing money. Then we knew that there was going to be stimulus checks. Then we knew what the picture was. And then the market started to go up. And the same thing here. What we're doing now is we're seeing the whole. What is the whole? Well, we've got you got $1.5 billion that Voyager has a Voyager whole of $1.5 billion. You got Celsius for $1.2 billion in the whole. And then you've got Three Arrows Capital, which basically owes 3.5 billion people, $3.5 billion to 27 different crypto companies. And in fact, somewhere over here, I may have these companies for. Here we go. So who are these companies here? These are the companies here. We'll go through it in a couple of seconds. So after this Black Swan event, we kind of know exactly what the extent of the damage is, and we can do our calculations, and we can start to recover. What was scaring the market was the fear of the unknown. We don't know who else is going to collapse. We don't know who else is going to fail. That's kind of out of the way now. The worst is out of the way. The panic is out of the way. And now we kind of know what the extent of the damage is, and now we can keep trading knowing what the extent of the damage is. So that's on the crypto side. At the same time, on the crypto side, you've also had all the capitulation. So if you look at this chart over here, this is the net realized losses. This is people that were forced to sell, okay? Or that capitulated and sold. And if you look at this chart over here, and we zoom up to today, what you realize is that we had the biggest realized loss of all time with Bitcoin now. So anyone who wants to sell basically took their loss. Anyone who wants to sell basically took their loss. The liquidations were a Black Swan event. We now know the extent of the Black Swan event. Great. So that's crypto. Crypto, the worst is over. The hurricane is over. What also happened in this time was we realized, or what we saw happening in this time is, regardless of what happened, regardless of all these liquidations and everything else, the one thing that held true was that the new world disrupted the old world. The protocols that remained healthy were the DeFi protocols that didn't have any human intervention. And the protocols that got hit the hardest were the ones that had human intervention. Voyager, Celsius, Three Arrows Capital, all run by humans, not by algorithms. And what you can see is that you can see over here that in this period, starting from January, look at the market share that Uniswap took from Coinbase. You now have Uniswap doing probably the same volume as Coinbase. So the migration, the health of the crypto ecosystem continues. The bombshell has been dropped. We've assessed the mess. We can now move on. It's now business as usual, and let's start to recover, exactly like COVID. So that's the first part of it. Now, let's look at where the stock markets are. So remember that the stock markets have been driven on one narrative. The narrative is inflation. Since November, and let's quickly go to Bitcoin, and let me show you the charts since November. If you look at the chart since November over here, let me just get rid of that for us so we can look at it properly. Okay, here we go. If you look at this trend over here, that whole trend, and then that little bounce, and then this whole trend over here, has all been driven by one narrative. And that narrative is inflation, right? That is why the market came down. The Fed's going to raise interest rates, it's going to slow, et cetera, et cetera, et cetera. Where are we when it comes to inflation? Well, you need to look at one chart. That is the chart that drives the inflation. The chart that drives the inflation is the commodities chart, because remember, inflation is what consumers pay for goods. The vast amount of what consumers pay for goods is actually made up by commodities. In fact, let me break it down even clearer for you. If you want to know how the CPI is made up, I'll make that bigger for you guys so you can see it. This is how the CPI is made up. This is what goes into the CPI. Shelter, rent, etc. Food, which includes a whole lot of commodity prices, because you've got to get the food to the stores, you've got to transport the food from point A to point B, transportation, energy, etc. So if you look at that, is what makes up CPI. So this to me is a pretty good indicator of what CPI is. So if you look at CPI here, you could probably say that CPI will come down about 20%. And we just had our worst CPI reading ever. We had a 9.1% CPI in the last reading, in the June reading, which was released in July. And that was 9.1%. And in my opinion, that is the highest that CPI, that inflation's ever going to be, or that inflation is going to be for now, because it takes the inflation price, the commodity prices in this period over here. So what I think is going to happen? Well, I think what's going to happen is going to be pretty interesting. I think that the Fed has a free pass this time in July. And the reason why the Fed has a free pass this time in July is because if you look at when the FOMC meeting is in July, you'll notice that the Fed meeting, where they decide what the interest rates are going to be, is on the 27th and 28th of July. Okay, so end of this month, 27th and 28th, the Fed's going to meet and they're going to decide whether or not they're going to raise interest rates and how much they're going to raise interest rates by. And everyone thinks that they're going to raise interest rates by 0.75 basis points, right? 0.75 basis points. Now, if they raise by they probably will raise by 0.75 basis points. Luckily, I don't know if it's luck or if this is orchestrated, but if you look at what happens the next day, the inflation number, the GDP growth numbers for the United States get released. And the GDP growth numbers in the previous quarter were negative. If we get another quarter of negative GDP numbers released on the 28th, then we are officially in a recession in the States. So the Fed meets one day before this. Yeah, they meet on the 27th. They meet on the 27th and 28th. FOMC 27th and 28th, 26th and 27th. They meet. They decide what the interest rate is. They raise the interest rate by 0.75 basis points. Now we got high interest rates. The next day, the US goes into a recession, or the US, it's officially confirmed that the US is in a recession. They've had 2 quarters of negative GDP growth. Then in August, there is no FOMC meeting. The FOMC, the Fed doesn't meet in August. Their next meeting is actually in September. So what happens in September? Well, in September, the inflation numbers get released. So in September, let's look at what date. So in September, you get the inflation numbers being released in September, okay? The inflation numbers in September will reflect the new commodities pricing. See, so we get the new commodities pricing, which will probably be 20% less. So let's say we get a lower inflation number, 7.5%. Then the Fed have their FOMC meeting again in September. And they're going to come out and they're going to say, look, we raised aggressively in June, we raised aggressively in July, we raised aggressively before July. And now inflation has started to come down. What we're doing is starting to bring inflation down. Gas prices are down, consumer prices are down, inflation is coming down. And that gives the Fed a license to be less aggressive at the September rate hike. So what I suspect is going to happen is we're going to get 0.75 now, no meeting in August. August inflation numbers are in the 8s, so not as high as 9.1, in the 8s. September inflation numbers are the ones that show that the inflation numbers are grossly reduced. And then bang, where are we? We get to the FOMC meeting in September and the Fed says, okay, hold on a second. What we're doing is working. We don't want to cripple the economy. We're already in a recession because we had 2 quarters of negative GDP growth. Employment's coming down. You probably saw that, where is this? Here we go. Apple also starting to slow down. So Tesla starting to slow down. Apple starts slowing down. And that gives the Fed the license to ease up on what they're doing. Now, when I say ease, I don't mean start putting money back into the economy, but not be so aggressive in putting money out of in getting money out of the economy or in increasing interest rates. And that's what I think will happen. So you've got the crypto liquidations pretty much done. The damage is, we kind of know what the damage is. We know that fundamentally crypto is moving to the decentralized world. We can see that in one example in the Coinbase numbers, but we can see it every single day. You can see it in the number of addresses holding Bitcoin going up and up and up every single day. So the revolution continues. And now the market is correcting itself. The market was very oversold. It's now starting to correct itself. And now that is why we're seeing this amazing pump over 24,119. And that's obviously going to drive the alts crazy in just a few minutes. So I think that the alts will actually start responding to this. Remember also in September is another big date, which is a date that I spoke to you about. It's a date that sent the Ethereum price going crazy. And that is because for the first time, not the first time. Can we say the first time? Because the Ethereum guys are so unreliable. We've now got a date. I mean, we've now got a date for when ETH will move from proof of work to proof of stake. You can see that, right? So someone says here, real estate starting to drop fast. You're right. I want to actually show you that we actually got data. Let's quickly look at this data. Here we go. So the mortgage applications is down 6.3%, which means that the housing market also slowing down. And remember that we said that as part of the inflation calculation, housing is part of it. So rental, here, shelter, which is housing, is part of it. So it's coming down. The inflation is going to come down. Inflation is out of control. And I think that the inflation narrative is finished now. Like, I think inflation, and remember, I think the markets are forward-looking. So I think the market's going to start basically going up now, because I think this inflation narrative is probably now behind us if my thesis plays out. Again, there's no guarantee that my thesis will play out, and who knows what's going to happen in the war. Anyway, let's get back to it. So we now have a date for the Ethereum merge from proof of work to proof of stake. Finally, we have this date. What is the date? Well, it's not actually a date, it's a block. And because it's actually a block, we don't know exactly when it's going to be, but we know it's somewhere between the 12th and the 19th of September. So it's somewhere around, let's call it the 19th of September to be safe. We're finally going to get the merge from ETH proof of work to ETH proof of stake. And a lot of people are asking, well, when merge? The truth is, the merge has actually happened a long time ago, but it's just been going on different types of testnets. Because remember, when you do this, you don't just go onto the mainnet, you go into different types of testnets. And I saw this tweet, which I think was a fantastic tweet, which explained it all perfectly well. So is it priced in? I don't think it's priced in. I think only now people are starting to price in the ETH merge because that's the new narrative. And I think that it's not yet priced in. And that's why ETH popped before everything else. And that's why Matic, which is a layer 2 on Ethereum, popped when this popped. Okay, are there risks? Yes, there are huge risks. But they've mitigated the risks. How do they mitigate the risks? By putting it on a testnet. So they put it onto multiple testnets, and it works. And she says, when does the proof of stake start for Ethereum? The proof of stake network has been running in parallel to Ethereum successfully and continuously for 594 days. What we need to do, though, is actually switch off the proof of work chain. And that's what's going to happen on the 19th of September. We're going to switch off the ETH proof of work chain. From that point on, ETH is not going to be a proof of work chain anymore. It's only going to be a proof of stake chain. So what happens on that day? A couple of things happen. The first thing is ETH becomes much more energy efficient. When it becomes much more energy efficient, we think that more institutions, corporations, pension funds that have the ESG narrative will be able to invest in ETH. So right now, there's this whole non-ESG or this ESG discussion around Bitcoin and Ethereum. Well, when this happens, the power consumption of ETH goes down. ETH also becomes deflationary because you will be burning more ETH than you create. So ETH actually starts getting a very limited supply. And lastly, what happens on this date is that people who stake their ETH start earning huge rewards for securing the network. Right now, those rewards are paid to the proof of work miners, but that will be paid to the holders of ETH who stake it for the proof of stake. And so now I think what we're starting to get is the beginning, not the end, the beginning of an ETH narrative, which could last in the absence of any big bombshells internationally until the merge. Buy the rumor, sell the news. Well, we could be very, very, very close to the opportunity. Well, we are an opportunity to buy the rumor and sell the news. If there is a sell the news event, will probably happen somewhere around September when this merge is finally successful and people go, okay, hooray, buy the rumor, sell the news. So how much ETH is staked? You can see that currently 13,090 ETH is currently staked. And that is how you secure the network, through the staked ETH. So 10% of all the circulating supply is already staked in anticipation of this of the merge. So let me just show you some of this. This is the chart of the ETH total value staked. So you have a look here. This is the chart of the ETH total value staked. Here we go. And you can see that 13,000, and it's increasing every time. In fact, if you look at the funds, the smart money has been buying and buying and buying Ethereum. I wanted to see if I've got something here for you. In fact, Jump own 1.27% of all ETH circulating supply in just one wallet. And if you look at the addresses with over 100 Ethereum, look at what the addresses with over 100 Ethereum is doing as the price of ETH is going up. Buying, buying, buying. So CryptoX says, yeah, the ETH merge will be moved. You're right. It might be moved. Again, right now they're committing to a date, but the Ethereum developers are notorious for giving us dates and then not sticking to those dates. That doesn't matter. That doesn't matter. That doesn't matter. If it doesn't happen in September, it's going to happen in October. If it doesn't happen in October, it'll happen in November. And if not, it'll happen in December. What we do know is that it is working, and that we know that it's working on multiple test nets. So not only has it gone through, I mean, it has to go through multiple test nets, and it's gone through all of them. Robstein network just merged. Gurley network merging is tentatively scheduled for August the 10th. And then finally in September, you pick your day, 12, 13, 14, 15, 16, whatever it is. That's when the final merge happens. Now, what you're seeing here is you're seeing ETH being bought, taken off the exchanges, and staked in the staking contract to secure the network, because that's when people will start earning 10, 11, 12% for securing the network. And so what you're going to have is you're going to have an investable asset for corporates which is ESG friendly, and that investable asset will start yielding 10, 11, 12, 13, 14, 15%, whatever it is. So that's, for me, that's the big narrative now. I think ETH is going to carry us through till September, and I don't think it's only going to be ETH. I think it's going to be anything that looks like ETH, feels like ETH, is related to ETH. So we saw Matic. Matic has no doubt been, I think, one of the best performers in this whole bull market. Let's quickly just look at Bitcoin, 24,213, but it doesn't matter. Let's look at Matic. Has Matic broken that $1?
No, not yet.
Not yet.
Some waiting.
So Matic, look, I'm not going to do a Matic show now. In fact, if you want a Matic show, just go and read or watch Miles' show. Miles is doing amazing stuff in these deep dives. And what you see here is he wrote was it 60 parts, this thing?
It was too many.
It was too many. It was actually, Miles wrote a book on Twitter.
It was good, 60 parts.
Yeah, but Miles literally wrote a book on Twitter. He wrote a book and he put it on Twitter.
And he got big names to retweet it, so it's fantastic.
Yeah, because he writes very well. You know, Miles is like Guy from Coin Bureau.
Yeah.
But except, I think, all due respect to Guy, I think Guy is amazing, but I think Guy is an actor. Miles actually knows his shit. He does this kind of stuff takes a long time to do. Anyway, he wrote this thing on Matic. It breaks down all their partnerships and all the take-up. Disney partnership, Strike partnership. So, let's look if we can just find all the partnerships that they've got here. And it was here in one of his tweets, one of the 97 trillion tweets that make up this thread. Anyway, somewhere here you'll find a list of all their partnerships, and you can see that there is actually adoption. And it's kind of, you know, as I said, it's related to ETH. It's built on ETH layer 2, which is Matic, and they have got a whole lot of great things rolling out. So I think that the Matic thing is good. Today they actually came out with an announcement. It wasn't a big surprise, but they came out with an announcement today that they are launching a ZK, zero knowledge EVM, which means that they're launching the first ethereal virtual machine compatible zero knowledge proof rollups or ZK rollups. And so what this means is that people can use zero knowledge proofs to get faster, cheaper transactions on the EVM network, and they can do it using Matic or Polygon, which is amazing. This is one of the big announcements. And these guys have been geniuses. What they've done is they've given so much news in the bear market. They've come out with more and more news. And one thing you'll notice about Matic, which is you can't really say this about many other tokens, but if you look at the Matic all-time high, the Matic all-time high is 290. It's trading at about, call it 1/3 of its all-time high. Now, how many tokens are trading at 1/3 of their all-time high today? Very few, like Bitcoin, Ethereum, Matic, that's it. The rest are trading way below. So Matic staging an unbelievable recovery. Would I be buying Matic now? No, I wouldn't be buying Matic now. I love Matic. If you're buying it for the long term, great, buy it for the long term. But if you're buying it to trade, I think that the problem is that Matic's had too much of a run too quickly. And then after a run like this, after a parabolic run like this, you'll always get some kind of pullback. So if you're investing, then just keep dollar cost averaging. Doesn't matter. Just keep dollar cost averaging. Every day, just dollar cost average a little bit more. That's it. Just dollar cost average, dollar cost every month, every week, just dollar cost average. But if you're trading, now's not the best time to be buying. Let's put it that way. What else? I feel like I've got so much to talk to you guys about, but I guess we must leave some stuff for tomorrow. Don't know if you saw this. This was the yacht that Three Arrows Capital bought with $50 million. I mean, who buys a yacht like this? You can rent it. Why do you buy a yacht like this? You know, I tweeted something the other day, and I said, if you think, if you read the court papers that Three Arrows Capital liquidation court papers, if you read the Three Arrows Capital liquidation court papers, it's crazy. The amount of people that they owe money to, unleveraged, unsecured loans that Three Arrows Capital took. I mean, it's the crypto equivalent of the Wolf of Wall Street. It's the crypto equivalent of the Wolf of Wall Street. These guys were pretty smart, I guess, but literally they faked it all the way to now a hole of $3.5 billion. They had $18 billion under management, and now they've got a hole of $3.5 billion. Absolutely crazy. You read those court papers. It's like one of the craziest things I've ever read. All right, that is, I think, it for today. Tomorrow we'll do a much deeper show. I mean, you probably saw that there was a wallet that is bidding $1 million for the Amazon.eth domain. I keep telling you guys, we have a show sponsor. I keep saying to you guys, it's called Unstoppable Domains. You know that. The link is in the description. If you want, go and secure the domains .bitcoin, .crypto, .whatever else. Because if you do, you may be able to sell those domains at a higher price. If you're on the other side of it, you're going to have a problem because someone's going to steal your domain, like someone's got the Amazon.eth domain, and now Amazon has to bid $1 million for it, and they might not even get it. That's it could go to 10 billion. If I owned Amazon.eth, I'd wait. Come back when you got $100 million. We'll have that discussion. Then. All right, let's do. I promised you guys let's do one ByBit 10x because I haven't been here for a while. I think it's only fair that we 10x someone's portfolio on ByBit. So I'm going to hide this. Carl, pick a number between 1 and a billion. Okay, let's pick number 28,110. If your account number 21,110, 28,810, you are going to we're going to 10x your account today. So does this person have money in their account? Account number 28,810. What do you think, Carl?
Yes.
28,810. What does this man or woman have in her account or his account?
$600.
Let's see. 28,810. There it is. Are you joking?
How much?
2.
That's what I meant.
$2. $2.
Well, they still win something.
Okay, so we're going to 10x that to $20. No, man. No, we can't do that. What we got to do is we got to do it again. Let's pretend that we didn't do it. We'll do it. This guy will get the $20. Let's take account number 30,000. Okay, remember, if you want to participate, there's a ByBit link below. You got to sign up with our referral link, and I will then, your name may be in, we'll get your account number, and we may 10x your portfolio. I'm going to do account number 30,000 as well. 30,000, here we go. Okay, let's see what 30,000 has in their account. What does 30,000 have in their account? We're going to 10x 30,000 as well, just because I've been away and because the guy had $2 in his account, and that's just a shame. $2.
There we go.
It's not meant to be today, guys. It's not meant to be today.
They're all ready.
We'll do it again tomorrow. Listen, guys, it's been amazing being back. It's been quite a long show, but I haven't been here for a while. Let's quickly take one last look at Bitcoin. Where are we? Bitcoin, you biscuit. 24,135. It's gonna go up. It's gonna. You gotta be. No one believes this rally. You've got to believe it.
Yeah, you got the trend.
The trend is your friend, and now the trend is up.
Higher lows, higher
Phone
highs.
your friend El Capo and tell him to close the shorts, bro.
I think he works off the 12-hour chart as his main one. That's what I gather.
Come on, bro. Tell him to close the charts. I mean, to close the longs. It's the shorts. Close the shorts. Close the shorts. All right. See you guys again tomorrow. Until then, have fun. Trade well. See you again tomorrow. Stay safe.